How much longer can the stock market rise? Hi, I'm Garrett Gunderson, New York Times bestselling author. I actually was kicked off CNBC for saying, hey, I don't think it's a good time to invest in the stock market back in 2008. We're at a place where we have not gone in other than one other time in our history this long without a recession. When that happens, people are going to report that they lost billions and eventually trillions of dollars in the market, but the reality is the money doesn't evaporate, it doesn't disappear. It transfers to someone else's account that's in the know. People are buying options. Some people are doing put options, hoping the market goes down. Other people are doing, they're going long and they're hoping that it's going to keep going up for a little bit longer. Part of the reason it goes up is there's just automatically people buying and putting money into their retirement plans. It's being spread into companies they know nothing about. They've never been in the boardroom. They don't know what the exit strategy is. They don't know how accurate the reporting is. They don't know if there's anything that's not been disclosed just yet or what kind of bad news is coming up. But we've been lulled to sleep in this. I got to tell you, pro investors don't just sit there and hope the long haul works out. When we hear that compound interest is some miracle, the only miracle is that it's been misquoted so often as Einstein saying that. The reality is he was in Austria. He was talking about the miracle of compounding numbers, and then Security and National Life in the 1920s misquoted him just before the Great Depression. So be really careful when other people that aren't stock market experts are giving you advice, or you feel that greed gland kick in, like you've got to get in or you're going to miss out on something. Because inevitably, that market is going to transfer the wealth somewhere else when everyone else says, oh, I lost money. You don't lose it. It doesn't just go away. It goes into other people's accounts, that it's their expertise, they have analysts, and they're going to make a bunch of money because there's a lot of things that are going on that are outside of our control. Admin fees, legal fees, 12B1 fees, which are marketing fees. I mean, the average is over 3% inside of the average retirement plan. How are you going to overcome that? It is such a detriment, not to mention we're at that dangerous level where the market could go down. So protect the downside. If you don't know what's going on, you don't have an exit strategy, you feel uncertain, you wouldn't feel good if you lost 10% or more of your money or gave it to someone else unintentionally. Well, now it's time to maybe get out, move to cash, invest back into yourself. Invest in what you know. Figure out your investor DNA. It's time to take the power back, take control of your personal financial situation, and you can get better returns doing a few simple things. Save on tax. Save on interest. Pay off high interest rate loans. Save on investment fees. Protect the downside of those investments. And finally, find out where you have duplicate coverages or costs with insurance. There's a lot of things you can do through efficiency to parallel the cash flow that any investment portfolio is going to create with less risk, less time, and no volatility.